everybody. So today we are here to know a bit about income from salaries. It starts from the day you join an organization. The first thing that comes to your hand is your CTC letter or your offer letter, and you start imagining as to ये कौन से components है? What are all these in my CTC? I mean, I really don't understand. I'm being paid a salary, and that is like one amount. Why is it bifurcated in so many components? I am being given salary. Why do I see medical component? Why do I see leave component? Or why do I see other kinds of components there? The question normally arises as soon as you receive your offer letter. Alright, we're going to study these components today. Also, once you've received your offer letter and once you start working somewhere, you start wondering as to what are the components in your salary slip as well. Certain times what happens is you've been told before joining an organization that your salary is say 6 lakhs a year, and you do not receive that much in the entire year. When you actually see your bank account or your bank statement, you start wondering, why am I not receiving that much? Maybe there are certain deductions. We will also talk about those deductions. There are certain deductions happening from your salary that your employer deducts from your salary and directly pays it to the government. Certain taxes, certain other types of deductions as well. Alright? You also, if you are an employee, you also must be submitting certain documents to your employer all the time and wondering why does this happen. Also wondering why is tax being deducted from my salary. I will pay it later on when I am going to file my return. But there are certain reasons to all this, and we will also see what are the components of salary and all the reasons as to why all this happens. We will have a lot more clarity on all this that I just spoke about and all other doubts that you might ask me. Starting with certain basic components of your salary. Okay, when you see your CTC, if you are an employee, you can just refer to your CTC right away. One of the basic component of your salary will be your basic salary, of course. Alright, that's the most minimum component. If your salary is like 50,000 a month, your basic salary will be something less than 25,000. Alright, that will give you the biggest shock of your life when you see that your basic salary is so less. If you're not given other components of your salary, your basic salary just doesn't count anything. The other components of the salary are given to an employee so that the employee can work well, work more efficiently, and work conveniently. Once you are an employee to an employer, that is to your boss or to your organization has to make sure that you have all the proper conveniences in your life so that you can work efficiently for the organization. And that is the reason other components are given to you. For example, medical component. Alright, we'll speak about these components. So we're done with basic salary. When talking about the taxability of basic salary, your entire basic salary is always taxable, all the time. Alright. Basic salary will also be shown in your salary slip. That is the first component of your salary. That is basic salary. And it is always taxable irrespective of anything. You never get any exemptions in it. You never get any deductions in it. Okay. Let's understand the difference between an exemption and a deduction. An exemption always means that kind of income or that kind of salary is not considered as an income or salary for taxability purposes. Alright, that's called an exemption. But when I talk about deductions, I mean that it is counted as a salary or it is counted as an income, and then at a later stage, you get some deductions out of it. Maybe deductions for some expenses that you have made for that kind of component, or some other kind of expenses or some other kind of deductions. That is basically you're just reducing your salary. You're not trying to exempt it by saying that I'm not even going to include it in my income component or my salary component. Alright. Moving to your second component of your salary is dearness allowance. This may not be there in your CTC or in your salary slips. Dearness allowances are basically given because the employer wants to take care of the increased cost of living. You must be very sure and you must agree to me when I say that each year the cost of living keeps increasing in any place that you're staying at. Alright. So considering the inflation rates or considering the increasing cost of living rates, there is a component in your salary which is known as dearness allowance, which means that the employer is trying to compensate you for that kind of inflation or that kind of cost of living that is increasing these days. That becomes dearness allowance. Dearness allowance is also all the time taxable. No exemption to this component or no deductions from these components. Fine? Alright? Now, the third component that I would want to talk about is the medical allowances. Alright? So the first two components were basic. That is basic salary and your dearness allowance. From now on, there are the allowances or the components that I'm going to talk about in the salary are the ones that I told you are for your convenience, for the convenience of an employee. They are mentioned in your CTC or in your salary structure. The third one is medical. Of course, it is human or it is bound that every person gets sick some or the other time in the entire year or any time during the span in your employment, of course. So your employer wants to give you a medical allowance. Okay. If, for example, your salary or your CTC has a medical allowance of X amount and you spend, say, something lesser than that, then whatever you spend is going to become your exempt amount. Alright, so this allowance is given to you for your medical needs, but only if you submit the kind of spent amount, that is bills. The bills could be from a hospital, the bills could be for medicines, the bills could be for checkups. You have to get all these bills and you have to submit it to your HR in case you need an exemption on them. Alright, otherwise if you do not submit any bills for this component of your salary, you will be taxed on that component. One more thing, only 15,000 of this component will be allowed to be taken as an exemption. Alright, for example, your salary has a component of say 24,000 for the entire year, which comes to 2,000 a month. But if you submit 15,000 of your bills, you will get 15,000 as exemption. For example, if you still submit 18,000 of your bills, you will still get only 15,000 as an exemption. Why? Because that is the limit. Okay, that is the threshold until where you can be given an exemption in your medical component, and let's call the medical component as medical allowances. Okay, we will use the word allowances whenever the organization or the employer is trying to give you certain benefits beyond your salary. Alright, he's looking after your medical bills, he's looking after your phone bills, or he's looking after your conveyance, transport. So basically, if anything is for your convenience as an employee, we will call it an allowance. Alright, so the second allowance that we spoke about was medical allowance. Let us keep in mind that 15,000 is the threshold limit for this medical allowance. Alright, and do not forget, you will have to submit your bills if you need exemption on this medical allowance. Let's go to the third and one of the very most important allowances, which is food allowance. Of course, it is human that on duty you will have some food, off duty also you will have some food. So this is similar to your medical allowance. It is 50 per day. 50 per day is exempt. If, for example, let's again take one example. If, for example, your salary component shows, if your CTC or other salary structure shows 2,400 for the entire year as as food allowance, sorry, my bad, as food allowance, you will get only 50 per day. You will get only 50 per day as your food allowance exempted, not beyond that. You will never be able to take anything beyond that as an exemption. So whatever is the remaining portion goes as taxable. Even here you will have to show as to this is the component of my food, or this is the bill that I have used for food every day. You will maybe 50 per day you will have to show as your bills to get your medical allowance. I'll give you an example. There are a lot of organizations who use two different ways in which they can give their employees this medical allowance tax free, because so there are two different things. It has to form a part of your salary, and secondly we're talking about the taxability. So food allowance will form a part of your salary, but if you do not use it, or if you do not go and eat that much, or if you do not submit those bills of 50 per day, you will not be able to take that kind of allowance in your, or take that kind of exemption when it is your tax paying time, or in case of your taxability, right? So let's talk about this. I was telling you there are two types in which organizations use the exemption. This 50 rupees exemption is one, they give you Sodexo coupons. And it is assumed that if you are given that Sodexo coupons, you've used them. So automatically you get that exemption because your employer is providing you Sodexo coupons. If you're getting Sodexo coupons, do not worry at all. You're getting an exemption in your food allowances. The second way in which employers these days give you a food exemption in your salary component is they have their own canteens providing you foods. Okay, you just have to swipe your card and that kind of expenses will be deducted from your bank account, and you will also get an exemption in that in your taxability or in your salary slips or in your CTCs. Okay, when it's your tax paying time or when it's your TDS paying time, this kind of expenses will be included in your TDS, or you can say it may be deducted from your incomes to pay less TDS. Alright, let's go to the next one, which is HRA. HRA stands for House Rent Allowance. Now, as I told you, the employer has to be very sure as to you are very convenient in doing all your personal work as well. Alright, so if you are living on rent somewhere nearby your office, you will be paying rent. So for that rent component, firstly, the employer is giving you a component in your salary for your rent, which is almost 50% of your basic salary. And secondly, the tax or the taxability or the government is giving you an exemption on it because, oh my God, you're spending so much on your rent. Alright, if you are an employee who is situated in one of the metro cities, then definitely you get a 50% exemption. I wouldn't say 50% exactly. I would say it is limited to 50% of your basic salary as an exemption, or 10% of your gross salary. There is a calculation as to how much you get exemption from your HRA component. You do not get the entire component as exempt. Let me take an example. If your employer has given you, say, 60,000 as HRA component in your CTC, you have a 6 lakh salary and you get 60,000 as your HRA component. There will be a calculation made as to 50% for 50% of your basic salary and the actual rent that you're paying, or 10% of your gross salary, 10% of your gross income. Whichever is less will be taken as an exemption figure, and the remaining part will be taxable. So whenever in any of the allowances, if I am mentioning some thresholds or some calculations, please keep in mind that the rest of the component or the rest of the allowance will be taxable. Alright, you will just get to reduce whatever is your threshold. As I said, in medical bills, you will be allowed to reduce from your salary income only 15,000. The rest will be taxable under the head salary. Alright. So, also, okay, I was saying that 50% when you are a metro city employee and 40% when you are a non-metro city employee. Alright. Because of course the cost of living in metro cities is far more than the non-metro cities. This is your, alright. Also, one more condition to avail this HRA exemption. You can always have an HRA component in your salary, but to get an HRA exemption in case of your taxes, you should not have a house nearby, or you should not have a house in the city itself. Also, neither your family can have a house in the city. If that is there, if you already own a house nearby, and if you are taking an HRA exemption that is a little illegal. I don't think you can do that, because you already own a house and then you are claiming that you pay some rent for a rented flat. Why aren't you living in your own flat? So of course that becomes illegal. So if you have your own house, or you have an owned house in the city nearby, you cannot take an HRA exemption. Fine, that becomes illegal. Now, if you're using your telephone or your mobile phone for your official purposes, there is a component in your salary which shows mobile or communication or telephone component or telephone allowance. Okay, this is similar to medical bills, where it doesn't matter how much the component is, but your exemption will be as much as you spend. But like medical bills, we do not have an exemption. We do not have a threshold like 15,000. As much as spend, you may get as exemption from the salary component. So for example, let's take an example. If your employer thinks 5,000 is the entire amount that you can spend in the entire year as telephone or mobile bills, and if you submit bills up to 4,000 rupees, 1,000 is going to go taxable. Okay, as much you spend will be reduced from your component of your telephone or mobile allowances, and the rest will be taxable. For example, you're married and if you have children, I'm moving on to the next allowance. If you are married and if you have children, so there are some expenses for their education, or maybe their hostel expenses. Even such kind of allowances are included in your salary. So when you are being hired, the employer will tell you that, oh, you are married and you have children, you should not be burdened with their education and their hostel fees. Let me provide you a component in your salary which will pay for their education and their hostel fees. I mean, that's what the logic is when you get your CTC or when you get your components of your salary. That's what the logic is. But when you will hear when you hear the exemption limits, you might just laugh upon it. The exemption limits that are given as per the government or as per taxation rules, it is 100 rupees per month for 2 kids. Okay, so that is 200 a month. And I don't think 100 rupees is any fees, any school has 100 rupees fees these days, except for government schools, of course. So that's the kind of exemption that we are getting. Whatever your component is, from that, you can reduce 100 rupees per month for 1 kid. Alright, that is 200 rupees for 2 kids into 12 months. Alright, and if your children, they are in hostel, you will get 300 rupees. Beyond that 100 rupees for education, you will get 300 rupees also for their hostel expenses. Alright, now this is limited only to 2 kids. If you have more than 2 kids, I'm sure you will not be able to take more exemption beyond these 2 kids. You'll be able to take only exemption for only these 2 kids. Alright, let's move on to the next one, which is uniform allowance. Now this is for people who might have uniforms. Alright, this is not very prevalent. If you get some uniform allowance, you buy that kind of uniform from that uniform allowance that your employer is giving you. You have to come and submit the expenses that you spent on buying that kind of uniform. Only that much will be exempt. Say if your uniform allowance for the entire year was 2,000 rupees, you spent only 1,000 rupees, you get 1,000 as your exemption amount. Fine. This is what I was talking about, your fixed salary. Alright, when you get your CTC, there is something called as fixed salary as well as variable salary. Your variable salary, I've already spoken about the fixed salary and its components. There might be some other components based on, based on your employer. If your employer wants to compensate for something else, he might just put it into special allowance, or he might just put it into some other kind of allowance that he wants to give you. Alright, just for example, if you've been posted at a hilly area, he will give you an hilly area allowance because you posted at a place where you wouldn't get all the luxuries of your life. or if you travel a lot, okay, if you travel a lot from your place to the client's place or anywhere pan India or outside India, you will get a transport allowance. Also, there is one more kind of allowance which is called the commute or the conveyance allowance, and that is related to commuting or commuting between your office, that is your office place where you would work, your workplace, and your house. And that is 19,200 per year, which is 1,600 a month. Okay, so you can spend 1,600 a month for your commute from your office to your house, to and fro, without being taxed on it, and that is a part of your salary, and you will not be taxed upon it. All right, which comes to 19,200 a year. Fine. So I was saying I'm done with the fixed components of your salary. Let's move on to the variable component. The variable component will always have your bonuses. Alright, bonuses, or you can say something beyond your salary. For example, if you're a salesperson and you get commission as your income, alright, you've been told that as much as you sell, you will get in the form of your commission and not as a part of your fixed salary. That is your variable pay. The more you sell, the more you get. The less you sell, the less you get. So that kind of commission is included in your variable pay. So this forms a part of your variable pay. Now even this is added to your entire salary, and that becomes your entire salary structure. Fine. You must be sometimes wondering, why are there certain deductions in my salary? If I am supposed to receive 6 lakhs in a year, I am not receiving 6 lakhs. Every time I get a salary slip, there are certain deductions in it. What are these deductions, and why are these deductions being made from my salary? I mean, this is my salary. Why do you deduct it? Okay. The kind of deductions that you normally would be seeing, the normal deductions I will speak about. The first will be your TDS. We'll come to that at a little later stage. The second one will be your PF. That is PT, that is profession tax. That is a kind of tax. TDS is also a tax. And the third one will be PF deductions. That is provident fund deductions. Alright. Let's start with PT. That is profession tax. Alright. Every person, now this depends from state to state. If you are in Maharashtra, and if you are a professional, if you are an employee, if you are an employer, irrespective of anything, you are employed. If you are employed, you have to pay 2,500 rupees a year as profession tax in order to help the government to, do something for people who are unemployed. So if you are employed, you will contribute 2,500 towards the development of the people who are unemployed, to develop some employment opportunities for them. How is this divided monthly? It is divided by 12, but that comes to 200 a month, and 200 into 12 will give you 2,400. Where is that 100 rupees? So you will be charged 200 every month, and you will be charged 300 in the month of February. So that is the kind of deduction happening from your salary. Your employer is supposed to deduct it from your salary, and he will pay it to the government or this act, or whoever are the authorities for profession tax. Alright. As I earlier told you, it depends from state to state how much has to be deducted, or how much, what is the kind of collection, what is the kind of authority we have for profession tax. Fine. So, as I have cleared, it is 200 per month. This is the first deduction, and 300 in the month of February. This is the first deduction that normally everybody will see in their salary slips. The second kind of deduction is going to be your TDS. Now, TDS is tax deducted at source. Government or the tax authorities came up with TDS because they never wanted the burden to be on an employee. Alright, they wanted the burden of paying taxes on the employer. So the employer was made in charge, or made liable or burdened with the responsibility of deducting the tax of his employees from their salary, because they are earning an income. So it is your income as an employee, and your employer is supposed to deduct the tax on the income that you are earning as salary and pay it to the government. All right. So this is the funda behind TDS or tax deducted at source. Now you must be asking me that you must be thinking or wondering that like 200 a month in profession tax, TDS is not consistent at all. Every salary slip I see a different TDS amount in my salary slip. Why is that so? Why do I see a different TDS amount in every salary slip that I have? Also, in the month of March, my TDS may be increased sometimes. And that's a little weird. How does that happen and why does that happen? Alright, so let me clarify that. When when there's a TDS deduction, your TDS is deducted on your based on your slab rates. All right, I'll explain to you what slab rates are. There are no fixed percentages like profession tax. Slab rates are slabs of your income and corresponding percentages of tax that each slab will have as a rate of tax, and that is how your tax is deducted or paid normally by a normal individual. The same calculation is done for your TDS on salary. Alright, so for example, giving you a basic example, that if you have a salary of say 6 lakh rupees, okay, the slab rates start from 0. So 0 to 2,50,000 of income has a nil rate of tax. Alright, after 2,50,000 you have to move to 5 lakhs. So from 2,50,000 to 5 lakhs, you have an income of 2,50,000. So we are progressively moving, okay? So keep in mind, we're progressively moving. 0 to 2,50,000, we have 0 tax. From 2,50,000 to 5 lakhs, we have an income of 2,50,000, which is taxed at 5%. Fine. From 5 lakhs, we move to 10 lakhs, which has an income of 5 lakh rupees. That is taxed at 20%, and anything beyond 10 lakhs is going to be taxed at 30%. So whichever slab rate your salary falls into, that is how you will have to calculate your progressive tax. So for first 2,50,000 you will pay no tax. For the next 2,50,000 you're going to pay 5% tax. For the next 5 lakhs, that is moving from 5 lakh to 10 lakhs, that is total 10 lakhs. So for the next 5 lakhs you're going to pay 20% of tax. For the next as much amount after or anything beyond 10 lakhs, you're always going to pay 30% tax. This way your TDS is calculated. Alright. So your TDS will be calculated after considering all the exemptions that I mentioned earlier. So when I say your salary is 6 lakhs, it is after deducting all your exemptions as well as your deductions under income tax. Right, your deductions will include something like investments that you're making, like life insurance, mutual funds, and if you are having a medical claim which is covered under section 80D, we will have a different session for this, that is deductions under section 80C or chapter 5A. We will have a different session on this. So if you submit your documents regarding these investments to your HR, the HR will take this into consideration and deduct it from your salary, and then accordingly calculate your total tax for the entire year. Okay, which will be your TDS, and whatever is the amount is divided in 12 months. And that figure is deducted from your salary every month. Alright. So for example, if you submit some documents at a later stage, maybe your TDS will reduce because that kind of salary, that kind of income has been reduced from your salary. That is the reason this TDS amount might keep changing. If you have not submitted any documents throughout the entire year, then maybe your TDS will never change. Your TDS will remain constant for all the 12 months, because the calculation that the HR has done is in that manner, that it is the entire salary has been taken, or entire tax has been taken, which will be divided by 12 in these 12 months. Alright, let's go to a few other components of your salary. I have already spoken about TDS. Now let's move on to gratuity. If you are an employee for if for an organization for more than 5 years, you are eligible for a gratuity payment. Gratuity basically means that your employer is showing you some gratitude for being loyal for these 5 years. If you're loyal for these 5 years and beyond 5 years, when you leave the organization, not necessarily you're retiring, but when you leave the organization after 5 years, the employer is going to show you some gratitude by paying you half a salary every year. Okay, so for example, if you have been working for 6 years, okay, and whatever is your last drawn salary, you will get half of that for each year that you have worked. For example, if your salary was 50,000, you will get 25,000 for 6 years. So 25 into 6 is going to be your gratuity amount, alright? And it is exempt to a certain extent, and there is a calculation for it, for the exemption of gratuity amount. I hope you have understood when I said you get half a salary for every year of your service as gratuity, and this is an obligation. I'm not even saying that the employer is just showing some gratitude. There is an act on gratuity, right? If you will work for more than 5 years, you're eligible for that kind of gratuity, and your employer has to give it to you. If he doesn't give it to you, you can ask for it, and you can show him the gratuity act, okay, and its rules and provisions. Fine. Let's move on to PF. There is one kind of deduction which I just mentioned was provident fund. All right, even this is an obligation for the employer. The employer has to deduct 12% from your salary, so 12% of your basic salary, and he has to deduct that kind of 12% from your entire salary and put it in a provident fund which earns you interest. So provident funds were started in India to develop a saving habit. Alright, so instead of you yourself saving it, it is the employer who is going to deduct 12% from your salary and put it in a employee, or put it in a provident fund, employee provident fund. Also note one thing, the 12% deduction or the 12% contribution that you are making from your salary, an equal contribution will be made by your employer in this provident fund in your name. So if you see a deduction of 3,000 in your salary slip, your actual contribution to this EPF, that is Employee Provident Fund, is 6,000 a month. So be happy that your employer is also contributing an equal amount for you in that kind of EPF. Okay, when you leave the organization, you can withdraw it, alright, but if you have worked continuously for 5 years, not necessarily in an organization, but continuously for 5 years after opening that kind of EPF account, you will not be taxed on it. Otherwise, you will be taxed on it. Also note one more thing, that this fund will earn you some interest, alright. So if it is being deposited somewhere, it will earn you interest, and if you calculate that your total deductions from your salary and plus the employer's contribution come to 1 lakh, you will not receive 1 lakh, you will receive something beyond 1 lakh, because you've been given interest on the deposits that you've been contributing to the Employee Provident Fund. Besides Employee Provident Fund, you can also make some voluntary contributions to Provident Funds, which will again earn you good amount of interest. So you can do a voluntary contribution to the Employee Provident Fund. Also, some employers, not these days, a lot of employers do this, they deduct a certain portion from your salary for pension. Okay, there is something called as a pension fund as well, like Provident Fund. There is something called as pension fund also. So if you want to, if the employer feels that there has to be a pension fund, and also it is obligatory for certain kind of employers, if they really want to deduct a pension fund from your salary, you will also see a pension fund in your salary component. You can submit certain documents to your HR or to your organization if you want deductions. Alright, I have mentioned the difference between exemptions and deductions. When I say deductions, it is the amount you've already spent on something else and you're trying to reduce your salary by that amount. One example of deductions that I gave you was contributing to or taking out an LIC policy, if you pay some premium for that LIC policy, you get a deduction in your income, in your total income. I'm not even saying your salary, but in your total income. So if you submit the documents for these deductions, you will have a lesser TDS. I think we are pretty much done with all the components, all the deductions and exemptions. I'll wait for 2 minutes for you to ask me certain questions. If there are any questions, please post and I will answer them. Meanwhile, let me tell you that if you are employed for for a very continuous period until you are 54 or 55 or something like that, for a very long period of time, you've never had a break, or you've never hopped from one place to other very quickly, or you've never had a gap between two jobs, you are eligible to withdraw 90% of your EPF after you are 54 years of age, because the retirement age is 60. So you're eligible to withdraw that kind of money. If you've hopped from one place to another, that is one employer to another employer, you can wait for 2 months and then withdraw your amount, and it becomes taxable if you've not served for more than 5 years. Or your other option is, if you're hopping from one employer to other, you can just transfer your amount from one employer to the other employer's name. Alright. You also have a site which will require your UAN. So this EPF, it goes to the government, right? Because it is an obligatory thing. So you have your own ID password. For everything is becoming digital, right? So you have your own ID password, and for that you will need UAN. That is unique. It's a unique number for your EPF. It's a universal account number. Sorry, by mistake, it's a universal account number, and this is used for your EPFs. You might want to search that number and see what is your contribution, what is your total contribution until now in your EPF. Just search on Google and you might get the site for EPF, and UAN is something you can find on your salary slip. You might just get it. I think there are no questions. We've already waited for 2 minutes. We will end the live session. I hope it was fruitful, and I hope you all have gained a lot of knowledge from it. We'll see you next time with some other thing. Thank you.